Ladies and gentlemen, good day and welcome to the LT Foods earnings conference call hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Suman Kumar from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Yeah, thank you. Good afternoon, everyone, and very warm welcome to LT Food Q1 FY22 post-result earning call hosted by Motilal Oswal Financial Services. On the call today, we have management team being represented by Mr. Ashwini Kumar Arora, MD and CEO, Mr. Vivek Chandra, CEO, Consumer Business, Ms. Monica Chawla, VP Finance and Strategy, and Mr. Sachin Gupta, Group Finance Controller. We'll begin the call with the key thoughts from the management team. Thereafter, we will open the floor for Q&A. I would now like to request the management to share their perspective on the performance of the company. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us on our earnings conference call. I would like to highlight that certain statements made or discussed on the conference call today will be forward-looking statements, and a disclaimer to this effect has been included in the results presentation shared with you earlier. Result documents are available on company's website and have also been uploaded on the stock exchanges. A transcript of this call would also be made available on the investor section of the company's website. I would like to begin by taking you through the key highlights of quarter financial year 22. On sequential basis, our consolidated revenue for the quarter 1 financial year 22 was up by 5% at rupees 1,223 crores versus rupees 1,165 crores in the quarter 4 financial year 21 on account of the increased sales from the organic business and the other income was up by 63% on account of the exchange gain, which is otherwise our regular income, but due to the accounting norms, it has been classified as other income and one-time exceptional incentive received from the government. The gross profit was up by 4% from rupees 383 crores to rupees 397 crores, though the margins were reduced by 45 bps to 32.5% due to increase in input cost. The other expenses were down by 62 bps versus last quarter. This led to an expansion in the EBITDA margins by 28 bps to 12.2% versus 11.9% in the quarter 4 financial year 21 and was up by 7.5% from rupees 138 to rupees 149 crores. The finance cost reduced by 12% and the overall fund cost was down from 7.45% to 4%. This led to an increase in the PBT by 16% to rupees 102 crores, while the margins expanded by 82 bps to 8.4%. The PAT increased by 28% to rupees 76 crores, while the margins expanded by 110 bps to 6.2%. The earning per share was also up by 29% to rupees 2.27 per share versus rupees 1.76. The cash profit is also up by 16% from rupees 105 crores to rupees 91 crores. Now I'd like to update you on all the efforts taken towards strengthening the balance sheet of the company. The debt equity ratio improved from 0.66 to 0.59 times as the overall debt of the company was down by rupees 95 crores to rupees 1,158 crores on Q-on-Q basis. This is to reiterate that majority of our debt is working capital debt, which is required because of the nature of our business, and our focus is to maintain the debt to EBITDA ratio between 2 to 3 times, which stood at 1.9 times versus 2.3 times. Current ratio also improved significantly to 1.83 from 1.70 last year. The return on capital employed was up by 175 bps from 13.7% to 15.4%. The return on equity was up by 301 bps from 12.6% to 15.7%. On year-on-year basis, the consolidated revenue for Q1 financial year 22 stood at rupees 1,223 crores. That was almost at par versus last year, as there was significant pantry stocking last year across globe due to pandemic. The other income increased on account of the one-time exceptional incentive and the exchange profits. The gross profit was up by 2% from rupees 389 crores to rupees 397 crores. The margins were up by 102 bits to 32.5% due to change in product mix. The employee cost was up by 23% on year-on-year basis, but if you see quarter-on-quarter, it is increased only by 4%. Last year, there was a good growth in the US and Europe, and we have strengthened our teams globally in the last year. The other expenses were up by 5% versus last year on account of the additional investments in the brand of approximately rupees 5 crores and the digital transformation for our supply chain and HR function, also amounting to rupees 5 crores. All these initiatives will help us to strengthen our business, to bring more efficiency in the working capital and improve the service level. The EBITDA margins reduced by 94 bits to 12.2% from 13.1% versus last year. The company has generated significant free cash flow amounting to rupees 135 crores, driven by strong performance in Q1 financial year 22 that has led to decline in overall debt by 148 crores. This further led to a reduction in the finance cost by 38% and the overall fund cost was down from 7.52% to 4%. The PBT reduced by 7% to rupees 102 crores, while the margins contracted by 49 bits to 8.4%. The PAT reduced by 8% to 76 crores, while the margins contracted by 45 bits to 6.2%. Now, I invite Mr. Ashwini Arora to give his comments on the business outlook.
Thank you, Monica. Good evening and thank you for joining us on the call today. The company is performing well and in line with the annual operating plan. In the international market, the business has normalized and the company is performing well and will deliver in line with our target. Now there is still some impact of the pandemic in the Indian market. We are optimistic on the outlook of the overall business as the category is growing in our core business and we are well placed to capture the growth with the combination of our strong brands such as DAAWAT and Royal, global supply chain hubs, and wide distribution network in India and across geographies. The organic segment is also growing in India and globally, and LT Food has been consistently capturing a significant share in this space as well. Another growth engine for the business, that is new product based on health and convenience platform, are also performing in line with our expectation, and we are optimistic on its growth trajectory. The company will continue its journey of creating a strong, progressive, sustainable, profitable, and growing consumer business across all geographies. Thank you. Now we open the session for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Yash Gupta from Angel Broking. Please go ahead.
So first question is on the volume again, sir. So this time also volume disappoints at 115, and last time also it was down. So you have said that it's due to the Saudi India issues and all. So what's this quarter issue? Is the same issues continuing?
So as far as the branded volumes are concerned, Mr. Yash, that's growing. Only there can be impact on the private label, that may recover, in the coming quarters. But as far as consumer branded business, that is growing.
So what's any update on the Saudi market, whether it's back to the normal or it's still the inventory and all those issues are?
It will take another quarter to come it back.
Okay, so next quarter also we are expecting the same line of volume.
On the branded side, you will see the growth. We are growing by 8%, and we are expecting the same kind of growth.
Okay. And second question on the China market, how the China market this quarter, how much quantity we have exported there?
So China is a little slower to its speed. It's a very kind of, it's not a regular business line of LT Food. As you know, LT Food is among the few registered in China to get it exported, and the opportunity was good and is good. But that's not a kind of strategic line of business for us.
No, would you like to give any amount of that quantity we have exported this quarter? That like last quarter, I think what I remember is that around about 20,000 we have done. So is there any amount quantity that you want to give?
Yeah. So, as far as the quantity goes, in quarter one, we have in this quarter we have exported 23,000 tons of China business.
Okay, and what's the expectation as of now? Almost 1 month of July. So it's in the same line, going to be in the same line, or is there any change into it?
It will be slow, little slow.
Little slow this quarter.
Yeah.
Okay. And sir, one more question on the domestic demand. How you are seeing the domestic demand? All those pent up demand, everything is I think now normalized. So how you are looking this particular quarter, the upcoming quarter from July to?
We are very optimistic on that, and the July month is saying us this. So we are expecting better quarter as far as India is concerned. This quarter, coming quarter.
Okay, so better quarter, that means the India revenue growth may be of 10 to 12% or double digit something kind of growth, or it's just another quarter of a single growth in the Indian domestic market?
So if you compare with the quarter on quarter, it will be in the range of double digit.
In the range of double digit. Okay, sure. Thank you, sir.
Thank you. The next question is from the line of Nilesh Doshi from Green Lantern. Please go ahead.
Yes, sir. Thank you for taking my question. You, in your opening remarks, spoke about you want to grow the business sustainable, profitable, etc. But I think every entrepreneur or businessman would want to do that. So instead of that, can you take us through more granularity that how exactly you want to drive the business? Because what appears is that we were talking about 10-12% growth rate 1.5, 2 years ago, but now we are coming back to 6, 7, 8% growth rate. A. B. EBITDA margins are not improving. It is showing that either you are not able to pass on the cost pressure, or there is some resistance or reluctance on the part of management to do that. And 3, that actually in terms of cost management, like your employee cost has gone up, but that is not reflecting into the revenue. So can you, sir, please help us, because we really want to understand that where you want this business to be in next 3 years' time, and where you want your EBITDA to be, because you also know that one of the large peer competitors' margins are at 18, 19, 20%, and we have been struggling at around 12% for last many years, in fact last 2 years. So I would really be thankful to you if you can help us in detail understanding of the business and the strategy.
Sure, Nilesh. Thank you for this question. If you see, for the last 3 years, we have a CAGR growth of 9%, and our PAT margin has grown by 45%. And we have improved on both in return on equity and the ROCE. As far as as I said, if you are saying this is in every businessman's vision, but on that vision we have given the growth both as I said for the last 3 years in top line and in the bottom line. And as far as expense are concerned, we have our half of the business in the Europe and America, and the people costs are high. But we are delivering on the margin expectation.
So, sir, can you help us in terms of what kind of vision or a target you have in terms of reaching, let's say, over the next 3 years on the revenue side and on the EBITDA margin side? Because gross margin is again not flowing through.
The company is working on kind of three engines. One is the core business, which is Basmati, and we as a company is very well placed across all geography. And as the category will grow, with our strong brand and distribution, we will do better than the category growth, and we are delivering on that. As far as the organic business is concerned, if we have seen for the last 5 years, that's giving an excellent growth. Last year we have grown by 50%. This quarter also, we have given a very good growth. As far as third engine is concerned, which is the new product line, which is on the base of convenience and health platform. We have launched Kappa Rice. That's we are getting very good response. On the sauté sauces, we are getting very good response. We have launched RTH in America. That's again, giving a very good strong. So as a company and as a management, we feel that we have developed a very strong business and kind of unique business which has a global platform to grow. We are very optimistic, Nilesh, on the business side.
Yeah, but sir, can you, if you don't mind,
Sure.
Where we want to be, sir? Because one thing I'm not able to understand, maybe if you can help us understand in detail, is that how the category can grow. I mean, how do you induce customer to use our product versus maybe, other East Asian product or maybe some other rice from Brazil or Mexico or versus Indonesia. So how do we induce customer, especially in US and Europe, that they consume more of our product? Or is it, sir, a very price sensitive market that only if you drop a cent or a 10 cent and then only it drives it? So can you please help us, what kind of efforts are we taking so that we actually get a actual volume growth versus we have a pricing power to take higher margin?
So Nilesh, regarding, if we talk about USA, we have 3-4 ethnicity which we, wanted to have in our portfolio. One is Indian and, kind of South Asian diaspora. Now we are talking to the 2 ethnicity, which is, the East Asian, which is the Filipinos and they have started, we have the data, they have started consuming basmati. And third is the Mexican, and fourth is the mainstream consumer. So our all marketing programs are working to recruit all these ethnicity. And if whatever the volume growth you are seeing, that is a result of that. We are already holding 50% market share in, USA. And still, we are growing there.
Okay.
Yeah.
Monica, can you help in the data point that what kind of ad spend we have last year, this quarter, and this quarter?
Let me answer the question. In this quarter, the ad spend, the promotion spend in this quarter was 22 crores, and it was 18 crores last same quarter.
So other than India, how much it was?
We have increased the spend globally. So it is India also increased, and there was an increase in the US as well of 2 crores.
Okay. And just last question, if I may. Sir, in the last call, you said that there was a freight cost increase because of the container cost, which is going up. So is there any normalization coming back, or you expect that to happen?
No, Nilesh, the freight market is very bad. Rather, we may see little impact in the coming quarters also. So it's almost, 3 times the freight cost has gone up.
Mm-hmm.
Yeah.
So can we expect once that normalizes, there would be some improvement in the margin, right?
Yeah, that will be after we are expecting that to be normalized, and roughly, the people talking on the shipping line is, and it will take another year to do that.
Oh, 1 more year. Okay.
Yeah.
Thank you. Thank you so much, sir.
Thank you, Nish.
Thank you. The next question is from the line of Amitabh Santalia from SKS Capital and Research. Please go ahead.
Hello. Hi,
yes,
Mr. Chopra. How are you?
I'm good.
Yeah. Good. So just wanted to again understand in line with the previous questions as to, has last couple of quarters been performance been sort of lower than what we had expected, and what could be the reasons, and is it also because of the year-on-year figures look relatively weak because of the panic buying during the COVID quarter last year? Was that a unusually high base that we're comparing this year's growth to? What are some factors, to kind of, for us to, despite all the efforts that we're making in new product launches, organic business, the, Kappa Rice and all the other innovative stuff that we've taken in brand building and distribution and, which on, and even on the marketing side, and considering that we're a well-diversified geography, what the impression we got in the December and quarter onwards, year first half, first 9 months, the trajectory was looking pretty good, and the management body language was also quite positive. But we somewhere seems to have lost the momentum, last couple of quarters. So is there something that is different, or is it just a bit of a combination of different factors, and how can the trajectory change to to a reasonable growth trajectory that we should be on?
Amitabhji, if you see, rather, we are whatever this quarter has been delivered, we are quite satisfied with that. If you see in the same quarter last year, we are almost there. And last year the quarter was, there was a lot of pent-up demand, and we are able to hold that kind of consumer base and customer base. We are very happy with that kind of. But as I said, we will keep that growth trajectory in place, and yes, you want to say?
So if you talk about the growth one, if you have the Q1 numbers of 19, so the revenue was 985 crores. From there, we have increased to currently a base of 1200 crores. So there is an increase of 24%. The last year, because of the pandemic and there was a stocking up of materials, the revenue grew. But if we take 2 years growth, then also there is a growth of 24%, and that is in line with the year-on-year growth. So the company has grown that.
Right. And in terms of profitability and free cash flows, etc., bit more on that. Is it at the desired level, or are there any levers that would help us improve that in the remaining part of the year?
So we are generating free cash flow, and if you see, quarter on quarter and year on year, we are distributing dividend, and we are reducing our, even the borrowings are all working capital borrowing, but we are reducing that, and our debt-EBITDA ratio is less than 2.
Right. But my other
all metrics
question
have improved. The ROCE has improved.
So
The journey will continue. The same
Sure.
growth journey will continue.
And your US and European business continues to be strong, based on what the promise was a couple of quarters ago?
Yes, it will be,
And any sort of growth levers there for the remainder of this year?
So the growth levers are almost, the same, recruiting new consumer and having the more customer. So we are working on all the levers that will bring us the growth.
Okay. Right. And there's one more question I had, which I'm just slipping off. I'll get back on the question queue.
Sure, sure. Anytime.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, good evening, sir.
Good
So
evening.
I have hi. So I have a couple of questions. So first is, if you can just give your thoughts around the current basmati situation as an industry in terms of the prices and the kind of inventory which industry is carrying, and possibly the situation going forward.
So, Resham, if your question is around, the basmati rice as an industry as a whole, they are doing good. So I always say, we have divided the basmati rice industry in two parts. One is that the companies which have complete, control on the value chain, that's a farm to fork, they are doing good. The category is reasonably growing, except, Iran is still a question for the industry. But rest of the world, is consumer business is growing. There is a little impact on the Horeca across the world because of this. We all know that's the COVID situation, and we are quite hopeful that when the situation will be normal, then there will be an addition to the growth which the industry is delivering. Regarding if your question is around paddy prices are very stable, and the crop is we are expecting 10% to 15% lower crop than the last year, but that is in certain variety and not all the varieties. So next year we may see 4 to 5% higher prices in the paddy.
Okay. And sir,
Does that answer your question, Resham?
Yeah. Also, if you can just highlight in terms of production and all, how are things? It has already completed, but harvesting and all. But what is the situation compared to last year?
Given the demand last condition. Year crop you're talking about, or the current, which is
the current which is going on, but I think harvesting is completely over, right?
आप sowing की बात कर रहे हो?
हाँ, sowing for the new year.
Yeah, so sowing for the new year already, started. It will end by the, say last week of. So we are already, in the first week of August, so almost done,
And also last year, what I was asking was last year closing stock and all. How is the situation because mills must be carrying inventory with them. So is it normal or?
Normal is very normal. Whatever the carryover is will be going. It's a very normal to the average years.
Okay. So there was this news item. I think a few weeks back that. There was this residue related issues in Pakistan, specifically on the basmati rice. And this is for Europe. And because LTIF has a slightly higher share in Europe within Indian companies, Anything which you have heard from the customer on this side?
Not really, Resham. We have not heard. I have also read the newspaper and have confirmed. Our company, but we have not heard anything.
Okay. And lastly, sir, what is the kind of growth you are expecting this year, and what will be the absolute debt level which you are looking by the end of this year?
So full year growth, we are expecting 7 to 10%, and as far as the bottom line is concerned, the free cash flow is concerned, we will be the free cash flow we will generate, will go into reducing the borrowing, unless and until some opportunity come on the inorganic side.
Okay. Understood. So no major capex this year, right?
So normal capex is not, it's a very regular capex in the range of 70 to 80 crore rupees. And we are investing in mostly capex in the green energy. This year we are putting 3.5 megawatt of solar power. We have this year we have started 3.2 megawatt, which from the husk, as a fuel we will generate power. So we will be generating roughly around 4.5 to 5 megawatt of power through our own generation.
Okay. Got it. Thank you very much and all the best.
Thank you, Resham. Thank you.
Thank you. The next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah. Thank you. Sir, I think in the opening it was other income includes one-time government incentive. So can you quantify and what was that incentive for?
It's a government subsidy. It was in the range of 6 to 7 crore.
Okay. So this is for what? As in subsidy on account of? I mean, is it something that we receive annually or?
It is by the U.S. government on the COVID. They have some incentive.
Okay, so it's a pure one. Okay.
Yeah. This is one time.
Sir, in terms of our realization, of course, last time you had mentioned last quarter that because of that non-basmati exports and the China exports, etc., our realizations were down. But this quarter also the realizations are still low. So what could be the reason this quarter?
If you talk about the realizations, the realizations are within the range of the realizations. They are 105 in case of the international, and that was same as 106 of the June one. So the realizations are not low this time.
Okay, I think on the presentation I was just working out. Maybe I'll just rework and I'll just check. I thought I had
if the China business is being excluded, the realizations are not low. This is within the parameters.
Okay. So you are saying 105 is the international and domestic one would be?
It is 48. It is same as that of the previous.
48. Okay, fine. The Horeca business you mentioned, so we have around 20 or 25% of our domestic business is Horeca. Is that correct?
In India, yes.
Yeah, I believe outside we are not much into Horeca.
So overall, if you talk the global revenue, 10 to 12% comes from Horeca.
Okay, but for domestic, I think it is around 20% or so.
Yeah, 20-25%.
20-25. And now, what portion do you feel it has recouped back for pre-pandemic levels to?
10 to 12% has been recouped.
Oh, so still 90% is remaining, or you are saying 10, 12 out of the 20%?
If we were supposed to get 25% revenue from the Horeca, now we are getting 10 to 12%.
Okay. So around 50% is come back. Okay, fine. This leave that we had acquired, I acquired in the sense we took some stake, a percentage stake. So how is it doing, and how are we currently accounting for it in the books of accounts?
Yes. What is around, Amit?
Sorry?
So I missed that question, please.
Leave that organic food business that we took stake in a quarter or probably 2 quarters back.
Mm-hmm.
So how is that doing, and how are we accounting for the revenue and the bottom line in this current books of accounts?
So, we have not hold the majority of that. We have just done an investment we have taken 30% stake in that company.
So that is an associate, there is no, the associate profits and losses are coming, and there is no consolidation of the revenues or everything is going on.
So only annually the share would have get accounted for?
Yes, it will be that way accounted.
Oh, okay. So how is it that doing now? I believe it's a very small size compared to our business, but just wanted to know because it's an organic business and our organic business is also doing quite decent. So just to understand that part.
Yes.
Hello?
Yes. So you have got the answer, or you have left any?
I'm asking how is that business doing, or that organic business leave? Of course, we have a minority stake, but just to understand if you can give some perspective as to how it's growing.
It's a small business, but I don't have just an update on that. We will let you know.
Okay, fine. And this recent current government push about this fortified rice, they are planning to have some sort of a policy where this fortified rice is a kind of a compulsion for this malnutrition, etc. So I believe, of course, we will not be in that segment, but any comments or anything will impact the rice industry per se?
The fortification, the government's policies, they are executing it very well. All the PDS rice they have made mandatory to put, do the fortification in rice, at least 70% of whatever the PDS they are getting. So the government is very serious on that. But we have also a small business, both as a supplier of fortified rice kernel. That's a very small business of us. But we have launched DAAWAT, which is fortified rice, and we are getting extremely very good response from the market, and consumers is very well the need of this, and we are doing good on that.
Okay. And the last question on the legal matter side, any update? That insurance matter that's been pending for quite some time now.
So, the court has resumed. We had a date yesterday, and it's doing good. We are expecting if no lockdown comes and court will remain working, we are assuming that in the 6 months' time we will get an verdict. The case is going very positive.
Okay. Thank you, and wish you all the very best.
Thank you, Amit. Thank you so much.
Thank you. The next question is from the line of Amit Vora from PCS Securities. Please go ahead.
Good afternoon, and thanks for taking my question. One thing I wanted to understand, what are the current realizations? Of course, you did mention about the quarter gone by, but how are they shaping up now?
Amit, but what do you mean by current?
I lost your voice there, sorry.
So, Amit, what exactly is the question on the realization?
I'm saying that, as I understand, the 105 international and 48 domestic was the realization in Q1. So, yes. What are they in Q2? How are they been
in the same range,
It's in the same range. Okay. And if you can give me the number on other income, there was some exchange benefit that has been received. So what is the quantum of that number?
So if you can, just send your question, then, we will get back to you on the exact number.
Okay. And on China volume, what has been the exact volume? Sorry if I missed that, if you have given that earlier.
That is 23,000 tons.
23,000 tons. All right. And this kind of volume, are you going to continue for the rest of the year, sending it to China?
No, as I said, this is not.
And there's some disturbance. I lost your voice there again.
Yeah. So I said, China is not a kind of strategic line of business. This is a good opportunity came, but we are not. It's slowing down.
Okay. And one feedback that's on the presentation, the way you have given your revenues is including the other income, and that is changing the way you are looking at gross margins. So how I am seeing it is that after removing the other income, the gross margins have actually hit by approximately 100 bps. So I don't know if you can just look into that as well.
Thank you for the feedback. And
basically, just to say that this other income is a part of the business income. It is the accounting requirement that states me to give this in the other income. Otherwise, my other income is a part of the income that is an exchange income. And I have a normal business that should be part, but accounting states this as an other income. So that should be included as per us, also should be part of the GPI.
Yeah, in that case, if you can just, specify what the exact amount in terms of exchange rate is, so we can knock off the one-off. That's the whole point.
If you talk about if the other income was 20, so if you...
No, Amit, I think you have a good, I think the valid feedback. In future, we will, take care of that, very valid feedback.
Thank you. Not bad.
Yeah.
Thank you. The next question is from the line of Amitabh Santalia from SKS Capital and Research. Please go ahead.
Hello.
Hi, Amitabh.
So hi again. So Mike, this was actually a little bit of a non-performance related question for the quarter. Generally, sir, we have been sort of somewhat of we've been an investor-friendly company, putting out data, meeting people for quite some time now. But the level of institutional interest in our company is abysmally low. If you leave out Rabobank, who's been on an exit phase, and probably reduced their stake to zero, we just have one mutual fund with a 3.5% stake and no FI, nothing. And this interest in the consumption space and the food space in India is so high. The average PE in the industry is more than 50. And, our PE continues to be like almost single digit. So what is the reason and what is the management doing to address this, extreme valuation gap, which kind of is not healthy, or almost you're not a new company or a new management that people don't know about or have not met or recognized. Why is it that especially given the bullish environment in the stock markets today, where even upstarts and newcomers in your business, in the food business in general, not basmati particularly, but branded food business, are commanding huge amount of interest and valuations from all kinds of players, institutions especially, and people are willing to pay a huge premium, and there's a complete lack of interest in anybody owning LT Food stock. So, just have you kind of introspected on this, and what is some measures you can take to kind of improve the image of the company, or is this an ongoing process? Because it's been a long wait for your investors.
Yeah. So thank you, Amitabh. Thank you for putting this question. As far as the company's business model, and as I said, consistently, the company is growing both in terms of the top line and the bottom line, we are delivering to the to the expectation. As far as making the balance sheet strong, the debt-EBITDA ratio is less than 2. If you see on the all parameter, the LT Food is doing extremely very well. Regarding the valuation, I think we are making all our efforts to make this investor community to understand, this is very good company to invest in. So I hope one day we will be able to make them understand, this is good company.
Yeah. So my thoughts on that, sir, is that you have a very strong U.S. business, and which is underappreciated.
Yeah.
How many companies in India have a sizable business like yours under a branded business in the U.S. So I think the company. I mean, pardon me for my assumptions here, but maybe the company should be a little more aggressive in doing some road shows to meet investors to get the story out. Maybe even look at institutional placement or something like that, so that there's some interest in the company, because that is one thought. And the other, of course, is there maybe you can consider something like a buyback, or if your stock continues to be undervalued, that is a strong tool that even the highly valued companies in globally and in India also follow as a way to reward shareholders and for signaling effect, that partly signaling, partly to return cash, partly to correct the valuation gap if there is any. And maybe it's time for you to consider that as well. I understand you want to conserve cash for growth, etc., but it's maybe instead of giving dividend, you should or increasing dividend rather. Perhaps I would strongly urge you to consider.
All the feedback is well noted, and we will work on that.
All right. Thank you.
Thank you.
Thank you. The next question is from the line of Nilesh Doshi from Green Lantern. Please go ahead.
Yeah, Ashwini ji, thank you once again.
Thank you.
I think, I would like to reiterate with the previous question that I think you need to do something in terms of creating a good visibility for a branded business. Very, very less number of companies can take such pain to create a branded business, and especially in US and Europe. So maybe you need to strengthen your team, or see that there's a good visibility in terms of as a company, as an investment, and institutional participation is really required.
Yes.
Second is it possible to get the EBITDA breakup between the three segments, Basmati, Organic, and
we will let you know.
Sure, if Monica can communicate to me.
Yeah, sure.
Second is, in the new product portfolio, are we making any losses currently?
Where?
In the new product portfolio?
Yeah, we are investing. New businesses need money too, and we are investing.
Yeah. So is that loss is actually hurting the overall margin on the blended basis?
So maybe I will say 0.5 to 1%.
Acha, okay. Not beyond that. And sir, how is the response
overall perspective?
Okay. And sir, how is the response currently?
Revenue I'm talking about. Yeah.
Okay. And just what is the response in the new product going forward? I mean, how do you see currently?
As I said, it's a very well taken. Wherever we have launched, we are getting. We have for the test. We have launched on the Amazon online. We are getting good response. We have launched
any kind of thought process you have, sir, that this business can be of a very, very big size over the next 5 years or so?
As I said, in the last, in the next 5 to 6 years, the roadmap is to have roughly around 15% of the revenue should come from the new product of lines, which is based on, and we are heading towards that. As far as product development is concerned, that's almost, so we are now going into the next phase of getting into the market, and we are very positive on that.
That's interesting. And any more products you're looking to add into the category?
Some I can't disclose at the moment, but few products are in the pipeline. Yeah.
Oh wow, that's great. Yeah. So wish you all the best and thank you for taking.
Thank you, Mr.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for the closing comments. Over to you.
Thank you everyone for your continued support. Hope we were able to address all your queries. Should you have any further questions, please feel free to contact our investor relation team. Thank you, and we look forward to connecting with you again. Thank you, and stay safe.
Thank you, members of the management. Ladies and gentlemen, on behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.